Hello and welcome to Crypto Weeklies. Today we are going to talk about Akash and its AI-based forecast. Before we look at the recent crash related to crypto, there are several narratives related to why the crash has occurred over the last 48 hours based on our word cloud, which is machine learning based analysis of social sentiment related to crypto over the last 7 days. Some of the narratives related to US recession, as well as Fed cuts, as well as some of the meetings that the US Fed has had over the last couple of days are popping up over here, mostly related to rate cut related news. Again, these are some of the bearish narratives coming up right now. If you were to look at in terms of where the risks in the market are, in terms of Bitcoin, which is the line in orange, and the Ether, which is line in blue. Right now both the risk levels are less than between 0.2 and 0.4. If we zoom out, this is again a low risk environment. That is, again, none of the content is financial advice, but again, if you look at the historical precedence over what happens when the risk goes low, that's usually when dollar cost averaging in the market makes more sense than dollar cost averaging out of the market when it's in a bubble territory. This is calculated by a normalized risk based on 20-week moving average and the current price of both ETH and Bitcoin. This is just 70 to 80% of the market. That's why we were focusing on this analysis. But for the wider crypto market, the latest risk score is at 0.18. That means, again, this is the if you were to zoom in or the risk level, this is normalized between 0 and 1. And again, whenever the color code is green or blue, that's when dollar cost averaging in makes most sense. This is calculation of what is the current risk level based on several factors such as volatility, alpha, beta, as well as percent drawdown, to provide one single holistic view of where the market is relative to past historical price action data. The key idea over here is when the risks are low, getting in the market, and when the risks are high, either halting, entering the market, or getting out of the market. Right now, over the last 7 to 8 days, you can see over here, July 21st, the risk was at around 0.25. Sorry, right now it's around 0.175. Again, to round it off, it's at 0.18, and they are falling at a severe rate. You can see over the last since August began, they have been in essentially in the green zone. Now, looking at some of the social sentiment. Currently, the overall social sentiment over the last 24 hours is at around 21. That is, again, a bearish bias over the last 24 hours. You can see most of the narratives over here are red in color. You can see at least the high confidence level, which is represent on the y-axis, are all bearish narratives. This is, again, all of the content is available on the website on the bottom of your screen, cryptoweeklies.com. You don't have to sign up or pay for anything. We are always in development, coming up with newer and better features to analyze what is happening in the market. Over the last 24 hours, you can see the performance based heat map. Only a handful of names are positive. Most of the market is bleeding. It's down. Over the last 7 days, again, one exception, render, rest the market is down. Over the last 30 days, again, most of the market is down. And 90 days, Caspa is up, XMR is up. Over the last 30 days, XRP is up. And now we'll be talking about Akash and its Akash Network and its token AKT. We'll start with the AI-based forecast. This is the price action of Akash since November 2020. You can check Akash on coin market cap over here. The current price is at around $2.28. Currently 95th by market cap, still one of the top 100 cryptos by market cap. You can see over here the price on a logarithmic scale. It's essentially the same chart. You can see over here. If you toggle between them, it's just this is a daily level. We have a weekly average based analysis, and over 60% of max supply is in circulation for Akash, which is one of the thresholds that we like to check if there is more room for token inflation or dilution, which is, again, a bad sign. But over here, as the threshold of 60% is already crossed, Incrementally speaking, the impact of new token release should diminish over time as long as the market cap keeps on growing like it has done over the last several key performance period. You can see although the price and market cap analysis is totally different picture there, that means historically speaking the prices, even though they are like a double headed peak, the market cap has grown. That means unless you were holding or staking Akash throughout this and his token AKT throughout this period, you have lost to some token inflation unless you were staking and getting some decent reward, staking reward in return. This going forward, again, now that we have covered tokenomics, going forward our machine learning based algorithm trained on price action since August 2020 forecast Akash's price at a base case level between $2.6 to about $3. Right now the price is at around $2.28. That means Akash has been a bear market prediction for this week for Akash was average price at around $2.30. It's pretty close to where the current price is. That is again 1 standard deviation floor usually holds unless it's a severe downturn, which is the bear case. Going forward, we will start with the bear case between now and end of year. The trailing floor for or bear case scenario for Akash is between $1 and essentially $2.30. If you would like to have a tabular view of week by week what is a 1 standard deviation floor, the column bear at 68 percentile confidence between now, that is the week ending today at August 4 till the end of year at around 95 cents. This is tabular for values. If you're interested in the base case, this is the tabular column for base case, and the 1 standard deviation bull case between $3 and $9. This is denoted by this line between $3 again to about around $9 till the end of year 2024. This is likely a 70% confidence level that the price stays between these bounds, that is between $1 and $2.30 to the downside. The base case between $2.50 and $3, and the bull case between $3 and $9. This is the machine learning based forecast for Akash. We also have a regression based analysis to check where the prices are and how and if what is the undervaluation and overvaluation zone. Right now the price per hour polynomial regression based analysis for Akash, the fair value is at around $3.40 and the current price is at around $2.28 like we just saw. That means the price is again 1 standard deviation below, or the green line, which is the 1 standard deviation band. You can see this is the band denoting a slight undervaluation. If the prices were to mean revert, the $3.40 would be a key level to watch for our regression based analysis for Akash. And over to the 3 models for valuation, this SMA model, which is normalized 20-week SMA based action, the DCM, which is a polynomial regression based model, and the time weighted average price model. We'll start with the simple moving average based model. Right now the risk level for Akash per this model is at 0.08. That is the lowest risk this token has been ever since July 2021. You can see that although this model does a fair valuation analysis during a short-term mean reversion trade like it did when the price was in this territory back in 2021. There was a mean reversion rally in the next coming months, but it did not form a local bottom or a macro bottom. During the macro bottom, the risk levels usually tend to be between 0.2 and 0.4. That is, this SMA model is only good for some short-term mean reversion trade. That's one valuation based approach. The second is the longer or moderate term valuation related model, which is the DCM model, which takes into the time weighted component, looks at what are some of the overvaluation zones historically speaking, how token had topped or bottomed based on the proportional distance between the fair value, which is the gray bar or the gray line, and the price action, and based on this proportional difference and a time weighted factor for diminishing volatility, the color codes are applied. Right now per this model, the risk level is at 0.12. That is again the second best time to dollar cost average Akash. You can see throughout the bear market, this particular zone that is between 0.1 risk and 0.2 risk. Again, the bear market began in 2021, late 2021. If you were DCing at between 0.1 and 0.2 risk, you were participating either in a short term mean reversion rallies, or you are finding macro bottoms. So again, this is a moderate time frame related valuation or accumulation related model. For this model, this is the second best time to dollar cost average, Akash. The last model that we will look at is the time weighted average price. This is the longest, or you can say this has a longest time horizon for this model. This considers the time weighted average price since the inception of the token, and the basic idea is when the prices are below this blue line, which is currently at around $1.95. Price action below this blue line is deeply undervalued, and if you have a longer time horizon, this should be a decent buy zone. But again, right now the price is above this time weighted average price. If and when the price falls below $2 per this model, this would be a good time to enter the market. This is again, none of the content is financial advice. Hope you like this content. If you did, please subscribe to the channel. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.